Okay, time now for a look at the day's business news and the markets. So we're watching the developments in London quite closely. To tell us how they've reacted, we're joined on set by our business editor, Stephen Carroll. Stephen.
Eve, this time yesterday we were talking about the dollar having fallen to the pound rather, falling to a 3-year low against the dollar. That's as investors fretted over Brexit. Things looking a bit more stable today, despite that defeat for Prime Minister Boris Johnson. The pound now trading for $1.21. That's up slightly on yesterday's lows. Some small gains against the euro as well. The markets will be watching for any clarity that might come during Wednesday's debate later. Currently, the pound trading for $1.21 and €1.10 as well. Now, the vast majority of economists believe that a no-deal exit would be very damaging for the UK economy, so any move to rule that out as a possibility is likely to boost the value of sterling and vice versa. Well, let's check in on the stock markets for you next. European markets starting the day up. An interesting move from the London markets, actually. Normally, the FTSE 100 moves in the opposite direction to sterling because it's dominated by exporting firms. But today, despite sterling being stronger, we've still got a gain on the London market at the start of the day, although it is a much more moderate gain compared to what's happening in Paris and in Frankfurt as well. In Asia, as we've been hearing, shares in Hong Kong have soared on those reports that Carrie Lam is going to withdraw the controversial extradition bill that's been at the root of those protests. The Hang Seng up over 3%, and that's really just jumped towards the end of the session as those reports emerged. Now, we know that the stock market in Hong Kong had been severely affected by the ongoing demonstrations, and business confidence in the city had tumbled as well. So it looks like the market's reacting positively to that news. Shares in the ride-hailing companies Uber and Lyft plunged to record lows, meanwhile, after a proposed bill in California could drastically change their business model. States lawmakers are expected to vote on the Assembly Bill 5 as early as later today. It could transform the legal status of drivers for ride-hailing companies from independent contractors to employees, guaranteeing them a minimum wage and paid leave. In an effort to stop the bill becoming law, the companies had offered a package that would include a minimum wage and benefits to its drivers. But as the vote looks increasingly likely, Uber and Lyft shares tumbled down 5% and 7% on Wall Street on Tuesday. Both firms say that the changes would increase their costs and their tax bills. Turning next to India, where a slowdown in economic growth is being felt by some major industries in the country. Figures published last Friday show that GDP grew by just 5% in the last quarter. That's the slowest expansion rate in 6 years. The motor industry is among those being hard hit. New car sales were down 30% in July. Lauren Breschdecker has more.
Sitting on the outskirts of New Delhi, the town of Manesar is home to India's largest automobile plant. The auto industry is routinely hailed as a central pillar of the country's economy, but in recent months, demand for vehicles has been on the decline. Rakesh Sharma is one of some 350,000 people working in the automobile sector to have lost their jobs since the start of the year.
There have been layoffs due to the recent slowdown, and I was among those who were let go.
The auto industry's struggles are also having ripple effects on other sectors of India's economy. Bilu Singh Rajput, who rents out rooms to migrant workers and owns a grocery store, says his earnings have fallen by 50% this past year.
There used to be a lot of workers living here, but now most of them are gone and no one's left to buy our stuff.
The car industry's ailments are symptomatic of a larger economic slowdown in India. The most recent figure of 5% GDP growth was the lowest in 6 years. The country's finance minister recently announced a series of measures to help revive the economy and stimulate the auto sector, including lifting a 2014 ban preventing government agencies from purchasing new vehicles. The measures were welcomed by car makers, yet many are calling on the government to do more to save an industry that currently employs around 35 million people.
Finally, from me, Ariana Grande is suing the retailer Forever 21, accusing it of tricking her fans into thinking that she had endorsed the company. The lawsuit focuses on social media posts, including this one, which uses images similar to Grande's Seven Rings music video. They use a lookalike model, debatable how lookalike she actually is, and even lyrics from the song in the post as well. The documents filed on behalf of Ariana Grande say that the resemblance in these images is uncanny and that Forever 21's intent was clear to suggest to the viewing public that she had endorsed them. Apparently, the company had actually contacted the singer's team last year to see if she would sign an endorsement deal, but ultimately they decided that the amount offered was, quote, insufficient for an artist of her stature. Eve.
OK, thanks a lot for that, Stephen. Stephen Carroll there with our business update.